Right. It's your boy Jay. It's the Digital Revolution podcast. Thank you guys for tuning in. If you like what I'm doing here, even though it's kind of a grassroots, bare bones up thing, please like and subscribe. Today I just really wanted to focus on equities again. Today is Monday, February 23rd, and the last podcast that I did, I was going over equities, and I was saying that we had major sell-off. We were having, days and days of a sell-off, and I just wanted to share that with you guys and do an update on equities. I think that's all I'm going to cover today. Hope you guys are doing well today. It's a major blizzard in the northeastern part of the world right now, and everything is like shut down. So I hope everybody's safe, everybody's well fed, everybody's doing well, because we are in some very, very hard times. And again, we're in World War III, and it's a fight for survival. It's a fight for our lives. And so anyways, let's get to it. Hopefully you guys can see me. Hopefully you guys can hear me. Like I was saying yesterday, let me just refresh the screen. Like I was saying yesterday, a continuation from the last podcast, because the last time that the FinViz was open, we had a green day, but we've had days and days of a sell-off in these markets. It's blood on the streets. Let's go through some of the indices. Let's check Netflix. Let's start off with Netflix. Well, no, actually, let's start off with Bitcoin. And again, it's your boy Jay. It's the Digital Revolution podcast. Please like and subscribe. I'm trying to get my numbers up there. Guys, it's a struggle. The algorithm, for whatever reason, it doesn't push me through for whatever reason, because of the things that I'm talking about. But anyways, please like and subscribe and share if you can. But anyways, so yeah, we're looking at the indices with the Ichimoku. And like I was saying yesterday, yeah, we're in a sweet spot. It's hitting its sweet spot area on the Fibonacci, and it looks like there is continuation of a sell-off. Looks like the price went down. Looks like we're selling off again today. Remember from last time, we're talking about how this drop was $1.14 trillion from the high to the low. That represents $1.14 trillion of, credit, if you will. Somebody realized the gain. Somebody is cashing out, or they need the money. A big player in Bitcoin. Who it is, we don't know exactly, but somebody out there is cashing out. We're hearing talks of illiquidity in the markets, illiquidity in the banks. Just money is drying up. The velocity of money is drying up because of the cycle that we're in. We're at the end of a 300, 400 year, 100 year, credit cycle, and all these major cycles are topping up, and Bitcoin is taking a hit. Did it actually touch the golden ratio? It hit it very close. It touched it and it bounced back up. So, I think the moves in the next, quarter or so, or the next few quarters or so, are going to be very significant for Bitcoin. It's going to tell us if there is support at this 60K level, if there's support in this area, or if it's going to be going down. I think that it's going to be going down because of the illiquidity of the markets, and because the velocity of money is slowing down, and who's going to actually step in and buy up this market. Hope you guys can hear me well. It's your boy Jay, it's the Digital Revolution podcast. I have not been on here in a while, but here I am. I'm on the board. I'm on the clock, so to speak. Getting over a cold. You know what I did to get over this cold because I feel much better today. I went the natural organic route and I just popped garlic, garlic and honey, or you just do like garlic. I did garlic, like four cloves of garlic, and I chased it down with like a little, sweetness, a little tea with some sugar in it, and that really helps. So garlic is a natural antibiotic. Whatever I had, it seemed to be going away. I'm feeling much better. So hope you guys are feeling good as well. They're trying to kill us all. One way or the other, they're trying to kill us all. Anyway, so yeah, Bitcoin continues to have a down day today. As you can see here, we're in the red. I'm not even going to bother to measure that, but it hit the sweet spot. And but is this the floor to Bitcoin? I mean, it took out all the gains from 2024, all those gains from 2024, and so this is the area of support right here. This is a key area, as you can see, the price action in this Fibonacci, in this golden zone right here, was a lot of price action right here. So this is going to be key areas of support and resistance. And so let's just say that if it strikes past 49,000, then Bitcoin is fucked up. I would not want to be in it. I think a lot of investors are losing a lot of money. I know a lot of people who's losing a lot of money in this Bitcoin. Okay, let's continue on. Hopefully you guys understanding me. I haven't been on here in a while, so I'm kind of rusty to speaking extemporaneously. Been under the weather. But guys, look at this. I mean, I just had to, kind of like get on here and talk about, like, I was seeing that we were having a lot of red days, a lot of selling off. And so today is Monday, the February 23rd, and we continue to have a sell-off in the markets. Yes, so let's look at Netflix. And I wanted to show you guys that I believe the stock market is crashing, but it's crashing little by little. It's crashing little by little. So Bitcoin down. Bitcoin was down 50 something percent. Netflix, look at Netflix, guys. I'm telling you, the market is crashing, but it's very subtle. Netflix down 44%. Excuse me. And that's on a daily chart. Netflix down 44%. My God. My God. Yeah, these markets are crashing. Netflix down 44%. Let's continue on to see what other. Let's look at J.P. Morgan Chase and Co. JPM. Let's check them out. Okay, well, not as a dramatic sell-off, but from the high to the latest low, it's about 13%. But you get the point, though. I mean, we are having a major sell-off. Oracle, we were talking about Oracle. We were talking about Oracle in the last podcast, and I think Oracle is a scam. Oracle, they make all the technology for, I forget exactly what they do, but they make technology for like processing stuff, like technology that process. But it's like outdated tech. It's like this outdated technology, like business to business. They sell technology for businesses. Okay, but yes, let's look up Oracle. Oracle, yes. Oracle was down. I mean, look at these charts, guys. The market is crashing. Oracle down 61%. And, it went back up. It went back up, but it's going right back down, taking out all these levels. Yeah, guys, the market is crashing. Okay, area of support is going to be 119.35 for Oracle. Hopefully you guys are understanding what I'm saying, and I'm conveying this message across, that basically the fucking stock market is fucked up. I mean, yep. Let's check Amazon. I think Amazon wasn't crashing as bad. Wow, what is this one? Crowd. Let's look at Crowd. CRWD. Yeah. So this is really what I wanted to show you guys, is that if you just kind of look back and you just look in the charts, Crowd down 38%. We are having a sell-off in the market, and it's a broad sell-off. I mean, it was focused in the financials and asset management, capital markets. It was focused in technology, consumer cyclicals, and we were having a little bit of a bump in healthcare, but I think healthcare is going down. There was like a 1% increase in healthcare. A lot of investors were investing long term into healthcare, but I think that also too is going to be, the investors or the traders or whatever you want to call it, are going to be shorting healthcare because, as I explained before, all these hospitals and all these, clinics are supported by, government subsidy. They're supported by Medicaid, Medicare. So if you get rid of that subsidy and these hospitals have to rely on, private insurance, they're going to go bust. So they need the socialized healthcare in order for that to stay propped up. So it's a lot of socialism in healthcare in the United States, particularly in the blue states. But that's, the socialization of healthcare, I think I am going to be getting more into, because that is a real concerning, thing that I see in the United States. Basically, people do need the socialized healthcare because they can't afford it. And the government is not going to be able to pay Medicaid, Medicare, welfare, Social Security in the next few quarters, or some people say in the next few years. So that's going to be a diminution of wealth when people have to come out of their pocket to pay for like things like cancer medication or just basic medication, basic, cleanings. You go to the dentist, you're going to have to pay for everything yourself in a hyperinflationary, period. So it's your boy Jay. Please like and subscribe. Hopefully I'm getting this across on the Mercury retrograde, if you guys follow the Mercury retrograde. But yeah, so we had sort of like an increase in investing into healthcare, but I think that there has been sort of like a broad lately in the last few trading days. It seems like we've had a broad sell-off in the markets, as you can see here. It looks like there is some, investing into healthcare. Let's look at Johnson and Johnson. Johnson and Johnson. Let's look at them. Yeah, Johnson and Johnson is doing really good. It's very strong. Very strong. But Ichimoku says, yeah. Yeah, so, wow. This stock price has continued to go up. Looks like it's still pretty strong. It's a strong trend. But if I pull back onto the 3-month chart, yeah, still looking strong. Johnson & Johnson is looking strong, but kind of a little overbought. It's a little overbought, but it looks like it's going to be continued strength into Johnson & Johnson again. Looks like investors are rotating out of, technology, the speculation of the AI bubble, and they're kind of going into healthcare temporarily. Let's look at Tesla. Yeah. Excuse me, guys. I'm getting over a cold. Yeah, so I went over Tesla, but down 22%. I mean, like, we have these companies, like, when we pull back and look at individual companies, we see, like, these companies are, like, down 44%, 50%. But the S&P 500 is looking really strong. S&P 500 is still very strong. We're still close to the all-time high. We have a consolidation in the S&P 500, but the price action is definitely consolidating, which means, if you're a short-term trader, maybe you get out because the market is going to make a significant move either up or down. Yeah, the S&P 500 is strong. The Dow, strong. We're having a slight sell-off in the major indices, but still looking very strong. On the daily, the price action, it fell below its 29-day moving average, and then it kind of touched single span A, but it bounced off. But single span A and single span B is flat, price pointing down. It looks like it's in consolidation. So, but the major indices continue to go up. So the Dow, the S&P 500. Let's look at the Nasdaq. Yeah, still very, very strong. Very close to its all-time high. Do we look at Amazon? Let me see. Yeah, BlackRock was down. Let's look at KKR, which is one of the largest, private equity firms. Let's look at KKR. Nosy. No way. Hold on one second. Let me make sure KKR. Make sure that is KKR. What was the ticker symbol for KKR? KKR and Co. Yeah, that was right. So KKR and Co. Wow. KKR and Co. Wow. This is one of the largest private equity firms possibly in the planet. I mean, KKR is down 50, let's just say 50%. What's going on with KKR? Let's look at the news. KKR news. It says, as of February 2026, KKR is heavily expanding its portfolio through strategic acquisition, including buying Arctos Partners for over $1.4 billion to enter professional sports. So they want to enter professional sports. That makes a lot of sense. A potential $1.3 billion acquisition of school firm XCL, and exploring a $1.5 billion sale of BMC Helix. Not sure what that is. Following strong Q4 2025 earnings, the firm is focusing on AI in Asian markets despite taking losses on a pandemic-era bike company investment. Well, KKR is down significantly. I mean, it's down 50%. So what is going on? Why the sell-off? KKR Credit Income Fund posts modest lift in NTA per unit. Where is the private equity partner excited about the deal that lost? Okay, not all private equity partners stay around and see the outcome of their investment. Where is the private equity partner excited about the deal that lost? Okay, so they lost some money. Goodbye, friends. Not really gonna go through all of this, but Timothy Franks had a long and lucrative career in private equity. Franks, who did not respond to an invitation to comment for this article, began his career. Okay, wait. I want to know what's going on with KKR. Okay, I think something happened that they invested into this bicycle company and it didn't, e-bike. KKR for some time, we believe that the bicycle sector and e-bikes in particular will play an increasingly important role in dealing with some of the major challenges the world is facing today, he declared, adding that KKR investment would help Accel to realize its full potential as a global industry leader and sustainable innovator. Okay, here it is. Accel did not achieve its full potential after over-ordering inventory. It instead faced a sales slump that threatened it with bankruptcy until its debts were restructured this week, resulting in KKR losing its $1.3 billion investment. Wow, so KKR losing $1.3 billion in investment because you know what? Consumer is not consuming. You know, e-bikes is like it's like discretionary income. It's based off of if interest rates are low. People don't want to take out credit and they don't want to use their credit card. And I can see how you would think, how a big company like KKR could think that, e-bikes is a thing because more and more people want sustainability. And hold on one second. So yeah, they want sustainability, and it seems like a good investment, but I don't want to go too much into this. But yeah, so bad investment, malinvestment. Investing into this market is going to be extremely difficult for even big companies like KKR. KKR, why don't you invest in oil, or why don't you invest in a gold mine? Speaking of gold mines, let's check into the gold mines. JDX. Let's check into the JDX. Yep, gold mines doing really good. Had a slight sell-off, but looks like it's rebounding. Let's check the JDXJ. Yeah, gold miners looking very strong, but I think that if I pull back a little bit, hopefully you guys are following me, you're following along. Yeah, so JDXJ looks like it still has some room to go. Looks like we are forming sort of like a cup formation here. This is a strong buying right here. So again, this has been the overall trend, that there is a capital rotation going into, miners, commodities, energy, value. It's going to go into value investing. And so the major indices are looking very toppy. And again, the whole reason why I'm trying to explain this is like when we pull back and we start looking at individual charts, we see that the market is crashing. I mean, Netflix down 44%, Bitcoin down 50%, JP Morgan Chase Bank 13%, Oracle 61%. Some other these companies are down like 38%, 22%. KKR down 50%. Consumer can't consume anymore. The velocity of money is slowing down. But the gold miners and the gold miner juniors are looking very good. Let's look at JDX though. I mean, JDX, we have this pattern here, and it's just parabolic now. JDX, not the junior, but the main JDX, looks like it's due for sort of a pullback. And I would think that, we could have a pullback to 68.13 possibly, or we could have a pullback to 85.45 dollars a share. Then it's going to go back up. But yeah, JDX, if you invested in JDX and it's still relatively cheap, I think JDX has a little bit more ways to go. Let me see. Let me look at it like this. I mean, it's just parabolic. I think that JDX is going to continue to go up. I would say its price target is somewhere around, let's just say 320, around 320. I'll give it a price target hovering around 3 something. Just put it right here. But it's going to consolidate. Right now, Let me see. Yeah, right now it's still strong, showing strong upward trend. But at some point, this is gonna have to. This strong upward trend is gonna have to slow down. It's gonna have to consolidate before we get more investors kind of crowding into JDX. I think right now JDX is kind of like it's not overvalued yet. Let's look at TRX. TRX is consolidating. This kind of cloud kind of concerns me a little bit because it shows sort of how do you say? It shows weak support is what I want to say. This kind of like thin cloud shows sort of a weak support. It's showing weak support, but the price action is doing really well. I mean, if we pull back on this chart here, we can see that it's kind of like going into an accumulation pattern. This is one of the few. TRX is a gold mine, by the way, in Tanzania, that's affiliated with Jim Sinclair and Bill Halter. And if you can see the chart here, it looks like we're going into sort of an accumulation pattern. We're still at undervaluation. We have a price target for TRX at $9 a share before it starts consolidating, and then we can kind of go from there, see if there's going to be more. But this is a really good trade to get into, and this is not financial advice, and I'm not saying that this is or not a trade, because this can go down at any time. And TRX is heavily correlates to the price of gold, but it looks like actually gold is doing really well. Let's just look at it. Hopefully this is recording still. You guys are following me. Yeah, gold had a slight sell-off. I think that was like 20%, but we rebounded and we're back at $5,000 for an ounce of gold. Silver rebounded. Yep, silver went down. I think that's like 40%, but we're still rebounding. And it's bouncing off the cloud, which means that there is support here. Kind of a thin support. I would like for the support to be a little bit, more thicker here in terms of the Ichimoku cloud, telling us, because the price bouncing off of the single span, this moving day average here. This is sort of like the 52 moving day average on single span A. It's saying that it's in consolidation. Silver is in consolidation. Anyways, so yeah, but look at the indices, guys. Like, damn. We're having more sell-off. What is this? BX. Yeah, Blackstone. We went over Blackstone. Yeah, more sell-off again. I mean, Blackstone. Why is Blackstone crashing? Thank you guys for tuning in. It's your boy Jason, Digital Revolution Podcast. The revolution will not be televised. Guys, I'm back on the motherfucking board. I'm back at it. I was sick as a dog yesterday, but I took some natural supplements. I took the natural garlic. No, not a pill. But I just took, garlic or whatever. But guys, bear with me. It's a Mercury retrograde, and I'm a little rusty here from speaking extemporaneously. But I'm back on the saddle. And guys, please like and subscribe if you like what I'm doing, going over the indices. My main thing is the indices, and going over some of the sound money, reviews. But anyways, I digress. So we have Blackstone. What's going on with Blackstone? Let's check out Blackstone. Well, okay, so KKR has some malinvestments. Um, Blackstone sell off. Why is it? Apollo Blackstone's exec offer reassurance as software sell off hits their stocks. Okay, so and this is from, this is February 13th, 2026. Reuters. Please, I don't want to subscribe, but yeah. Apollo Blackstone's exec offer reassurance as software sell-off hits their stocks too. Wow, they're reassuring people. There's Blackstone, Apollo. Let me look up Apollo. I'm gonna get more into that, but guys, bear with me. I hope this message is being conveyed that we are having a sell-off, and like when we pull back and when we look at individual stocks, we see that these stocks are down dramatically, but the major indices are still up, because the major indices, the Dow, the S&P 500, are really the indices that control the 401ks and the IRAs. Those go down, then the whole entire shebang goes down. But yes, Apollo. Is this it though? Anyway, so I'm gonna check Apollo, but so yeah, AI disruption fears impact private capital firms' stock prices. Executive defend portfolios, downplay software exposure. Wait a minute. Let me just go back to Blackstone. Blackstone down. I mean, that is a dramatic sell-off. I mean, that is a huge sell-off in his stock price. And again, when we measure this downtrend, excuse me, guys, 44%. 44%, which brings us back to, brings us back to 2024, around May of 2024. All those gains lost. Let's just pull back a little bit. I want to pull back a little bit, let's try the weekly, so we can see the chart in totality. Yeah, I mean, look at that. Swing low, swing high. Yeah. Oh, so the price action on the weekly fell below its sweet spot, which would be the 121.84. Its Fibonacci golden ratio. It fell below that key area of support. This is a key area of support here. It fell below that key area of support. Looks like it's going to be more selling in Blackstone. But anyway, so guys, please like and subscribe. Bear with me. I haven't been on here in a while. It's been 2 years since I've been on here. And anyways, well, yeah, so executives at Apollo. Oh, here it is. Here's the price. Ares, Blackstone, KKR, and other private capital firms are having trouble convincing stock market investors that their portfolios are safe from the effects of a sell-off, battering the software sector due to fears that artificial intelligence will render it irrelevant. Alternative asset managers, which mainly invest outside traditional stock and bond markets, have not been able to shake off fears that emerged late last year about risk in private credit. Yes, private credit is its own beast. Private credit is the next subprime. But you know what? I'm seeing many subprimes out there. I mean, you just pick one and name it. I mean, from student loans to the increase of foreclosures to the bond market, and the suppression of interest rates in the bond market, and talks about the United States can't get anybody to buy its bonds, to private credit, and all this private credit, all this leverage, all this debt out there. Anyway, so now a sell-off in software stocks have driven the money managers' own shares still lower, despite billions of dollars of new client money and a resurgence in mergers and acquisitions that analysts say should translate to more revenue. No, the fuck it's not. Guys, they're gaslighting. They're gaslighting because according to Ichimoku, this stock price is gonna be falling even more. Like, I think Blackstone, its next target is 73.51. 73.51, which pushes back to 2022 levels. Let's just measure how far that is. Hopefully you guys like what I'm doing. Like and subscribe if you can. Yeah, that would be 60 something percent. If it fell to that level, which I believe it is, to this key area of support, which would be 73.51, and that would be 64 something percent. But people like Egon von Grers is saying that the Dow is going to fall to 5,000, which is going to be an overall 90% correction in the stock market. So individual stocks are slowly falling when we look at individual stocks. But again, the major indices are going up because they're pumping. They're pumping it up. They're pumping it full of credit. The Exchange Stabilization Fund. Did we look at BlackRock? BlackRock looks like it's holding up pretty good. Yeah, not that much. BlackRock is holding up, but it looks like it's in consolidation. It looks like the market is in consolidation. Yeah, so AI is fucking up everything. Let's just before I continue, let's look at Apollo. If I can find the stock price. Here it is. Apollo down 40%. Guys, look at, like, damn, like, the stock market is crashing. The overall companies are crashing, but the major indices are still going because they control the 401ks, the IRAs. So Donald Trump doesn't want them to fall, but nobody knows where the top is. Okay, so let's look at Wells Fargo, WFC. Wells Fargo. Still pretty strong. Wells Fargo handles a lot of Chinese money, foreign accounts. I also think that Wells Fargo is a scam bank. They have a lot of scamation, a lot of fraud, just like Chase Bank. Chase Bank has like 30-something criminal felonies against it. Bank of America. Let's check out Bank of America. Okay, so Bank of America looks like it's consolidating, but still close to the top. Let's look at Visa. Yeah, what was going on with Visa? Okay, showing some signs of weakness here, down 17%. So yeah, the market is being dragged down, and these indices. You still have some, indices that are holding up, but it's being dragged down by the overall market. Yeah. Let's look at Microsoft. Continue selling, continue sell off. Microsoft down 30%. I mean, like these are significant losses. 30% again, like 30%, 40% Apollo, 40% Blackstone, 44%. Like guys, like it's happening. Okay, Dow up after new Trump tariffs. Dow slides 800 points as sell-off ramps up following Trump's global tariffs. Let's check Nvidia. Nvidia, looks like Nvidia is in consolidation, but still close to the all-time high. You have all the drug money, all the money laundering going into Nvidia, going into the major indices. You have a lot of foreign money going into these indices, but still showing strong levels of support here. But we're in consolidation. The market is taking. Seems like the market is taking a breather. Seems like the market is headed down and sideways and down overall. Again, this is not financial advice. Let's look at Morgan Stanley. Okay, still close to the all-time highs. I showed you Nike. Nike, major sell-off. Well, how much was Nike? Nike was major sell-off. What is this? Home improvement restaurants. BKNG. Let's just look at something like that. Can see something's going on. The stop losses are being triggered. The quants, the computers are selling off. I believe that these banks and these private equity firms, not only are they malinvestments, but they need the money. They're running out of money. Is medical properties trust stock going to zero? I would say be careful with anything in healthcare because healthcare is going down. It's a temporary buy into healthcare because investors are looking for sort of a safe haven from this volatility in the market. But healthcare also too. I would be shorting healthcare. I'm not telling you to do that, but I would be shorting healthcare. I'm telling you guys, the government is insolvent. They have no way to pay for Medicaid, Medicare moving forward, and it's happening little by little. The collapse is happening little by little. So not as to alarm anybody. Anyway, so it's your boy Jay. It's the Digital Revolution Podcast. Please like and subscribe. We're going over the indices in this blizzard. Yes, let's look at UBS Bank Corp. Or what was it? What was the price? I'm sorry, USB. Okay. Still close to its all-time high. This is on a weekly chart. Look like we're headed to a double top here. Okay, still close to its all-time high. PNC. Let's look at PNC. That can't be it. That can't be PNC. Let's look at Goldman Sachs, GS. Cozy. Man, Goldman Sachs. Wow. Still close to the all-time high. Even though I believe Goldman Sachs and Chase Bank are insolvent. I personally believe that they're insolvent. All the banks are insolvent. Close to the all-time high. Yes, looks like the stock market is in a consolidation. What is this? Adobe? ADBE. Yeah, I remember last time I saw Adobe, it was down. Big time. Adobe down. Damn. Guys, look at, I'm showing you the charts, guys. It's the same thing the banks can see, the same thing everybody sees. Damn, Adobe down 60%. 64% down. And the Trump administration said the economy's doing good. They're selling off. They're selling out. They're cashing out. The market is getting toppy. The big players and the Wells in the stock market, they are slowly front running the market and they're cashing out. They're getting their cash. They're getting their cash out of the market, but still leaving some of their cash in the indices. And I would suggest, people do the same, but do not take any financial advice. Whatever you cannot afford to lose, you should probably take out of the stock market. It only should be what you can afford to lose. You should take it out of the stock market and do what Bill Halter says: buy gold and silver, because all of this is just a smoke and mirrors. The whole entire stock market is based off of credit, as I continue to mention. But you get your money and you cash out and you buy something, real estate, or you buy a bunch of toilet paper, buy some food that's gonna last you. What's over here? I want to look at farm and this. I want to look at these indices. State Street. Let's look at State Street. Probably State Street is doing well. One of the big players. Yep. Still hovering around its all-time high, State Street. Just for shits and giggles, let's look at Truist Financial Corp, TFC. TFC. Seems like there's a lot of volatility in the markets. Yeah, this price went down, but it looks like it's rebounding. Okay, I'm gonna look up a few more, and then that will be it for today. But I just wanted to show you guys, that we've had significant down days. I mean, we've had days of red, as you can see. And again, some indices are down 60%, 30%. Like, the big players, as we, discuss, are getting out. Let me see something. Oh, let's look at that. Luxury, Moet Hennessy, LVMH. Yeah, not doing so good either. Yeah, consumer goods is not doing good. Retail is not doing good. And we're only in the first quarter. Yeah. A lot of volatility out there. But it's very subtle. American Express, AXP. Let's look at AXP. It says it's down 7%. Okay, but still very close to this all-time high. But again, it's just overall selling and consolidation. I wonder what's going to be the next significant move. And I think the next significant move is going to have to be related to Bitcoin. Bitcoin is dragging down the market. I mean, this is key area of support right here is $57,000. $57,000. 57,000. Let me see. Yeah. 58, 57. That's the key area of support right there. Looks like it looks like it's holding here, but we still have a few more trading days to really see how this is going to play out. If it falls below 50,000, guys, the stock market is going to further continue to crash. Bitcoin is dragging down the market. Yes, and two INTU. Looks like even more sell off. Let's refresh this. Hopefully you guys follow me. It's your boy Jay. Hopefully you guys are following me on this. I am under the weather. Okay, so here's another example of Intu down 56%. What's going on with Intu? Intu Inc. Why such a sell-off? Okay, Intu stock hits 52-week low. When was this? This is 2 hours. Okay, so 52-week low. Yes. Yeah. 373. Granite Investment Partners LLC grows stock holdings and Intu. Maybe they're buying it up cheap, but let me tell you. Let me see. And two, man, free fall. That's a free fall. 50% of it gone. 50%, 56%. What, do they think this is a bargain? And two, 100 billion panic. Premature AI death call. Okay, let's look at this. Wow. And two, it's 100 billion panic. Premature AI death call. Man, these markets are fucked. And two, that's lost 100 billion in market value amid AI disruption fears. But I see this as an overreaction. Oh, really? And two, it's proprietary financial DNA and deeper contextual data create a durable moat against commoditized AI solutions. Blah 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 blah. Is it gonna shut me off? Anyways. I don't want to subscribe. I just want to read the fucking... Anyway, so I'm not even going to go into that, but... So again, it's the AI bubble, the AI speculation. Wow, but Kovitz Investment Group Partners LLC purchases 5,637 shares of Intu just recently. They must think it's a bargain. Raise the stake in the equity. Okay, so I'm not subscribing to any of this shit. TurboTax will pay for your Uber. Intu reports strong first quarter results and reiterates full year guidance. That was 2025. What it seems like is that these companies consider Intu, just from reading the article, they consider it a discounted, but market's in a free fall. What is Intu anyway? What company? Intu Inc. What do they do? Intu Inc. is an American multinational business software company that specializes in financial software. Headquartered in Mountain View, California, the company is led by CEO, blah, blah, blah. Yeah, no. Software company. I mean, I would have to do more due diligence on it, but I wouldn't touch any of these software companies with a 10-foot pole. That's just me. I mean, looks like there is strong support right here. I think I'm going to wrap this up. But anyways, looks like it's strong support around right here in this 300 area. But if it breaks those levels, then we can expect to see, more selling off, and then another area of support at 189.23. Let me just make that. So anyways, yes, so back to the FinViz, and you can see that we're having another down day. And again, like I reiterate that we've been having these down days. I hope I'm getting my message across. I'm not in the best, shape right now, but let's look at some of the news. Let's look at some of the news before we wrap this up. Winners and losers emerge as Trump revamps tariff regimen. I mean, what do Americans will end up paying for all these tariffs, from what I understand? Is Bitcoin price slump an investing opportunity? Here's how to buy Bitcoin. Yeah, do they want the retail investors to buy this Bitcoin? Nvidia stock hits a bizarre level of valuation. Yeah, it's overvaluation, but again, as we discussed, Nvidia, a lot of these major indices have drug money, money laundering, child trafficking. They laundering money into the stock market. The set on private credit. Oh, Blue Owl. Gonna have to end this soon. Blue Owl anxiety. Okay, wait. Stock symbol. Oh, okay. So this is gonna be the last one because my computer is going. But what happened with Blue Owl? Blue Owl Capital. Damn. %61. Okay, before I go, what's up with Blue Owl? CoreWeave stock drops. YA 4 billion Blue Owl funding snag has investors. CoreWeave. We'll get into CoreWeave later, but isn't that another scam company? Saba offers to buy stakes in Blue Owl funds. Irrational fears return. I mean, is the private credit canary in the gold mine? Yeah, Blue Owl is private credit, right? Blue Owl. What do they do? Well, is a lending alternative asset manager with over 307 billion in assets under management as of early 2026. They provide private capital solutions for businesses and investment opportunities for institutional and individual investors through three main platforms: credit, GP strategic capital, and real estate. Credit provides direct lending solutions to middle market companies and technology firms. Wow, it's private credit. They're saying that Blue Owl is the canary in the coal mine. Private credit, yeah, something going on with private credit. Private credit is the next subprime. We'll get more into private credit and okay. So, but anyways, yeah. So JP Strategic Capital. I mean, I was trying to ask the AI exactly there's no way for me to go in all these indices and just be like, okay, well, we know Bitcoin lost $1 trillion and all these companies are losing billions of dollars. These companies that are down 60%, 61%, 44%, they're losing billions of dollars. Like the total summation of all of those losses, I think we're hitting trillions and trillions of dollars is being evaporated from the stock market. Somebody out there is illiquid. Somebody out there needs the money. Okay, let's finish this up on what is Blue Owl and why are people suddenly worried about private credit. Illiquid loans, investor demands, Blue Owl's software leading triggers the private credit canary in the gold mine, New York Times. Blue Owl is spoiling private credit sales pitch. Blue Owl anxiety rattles the 1.8 trillion private credit market. Damn. I mean, you see the indice down 61%. Like, wait a minute. That brings it back to like 2022. Hasn't been around for a long time, but it basically brings it back to its original price. No, this is it's collapse. They're getting out of it. They're getting out of it. They might ask me. Let me just. Is the private credit canary in the coal mine? Steep declines in the shares of private lenders after a major fund changed how investors can withdraw money have sparked. Oh yeah, you have to. Anyways, so it looks like they're making all sort of stipulations for you to get your money too. Like it's harder to get your money out of the system. Blue Owl halts redemptions at one of its funds, deepening sell-off in private equity. Blue Owl CEO Craig Packer speaks during an interview with CNBC on the floor at the New York Stock Exchange. Y'all motherfuckers as fuck. Redemptions at Blue Owl Capital Corp to be permanently halted. God damn, meaning you can't get your money out. Proceeds to return capital to shareholders, pay down debt. Blue Owl shares fell 7%, although overall it's down 61%. Private capital firm Blue Owl is selling $1.4 billion in assets from 3 of its credit funds so it can return capital to investors and pay down debt, and permanently halting redemptions at one of the funds in the company said as direct lending and software stocks come under pressure. So a lot of this is coming from the sell-off in software, even though they're saying AI is the next big thing. But I think insurance companies can't insure it. The sell comes just over 3 months after Blue Owl abandoned a plan to merge 2 of the 3 funds into one and to temporarily halt redemptions in the smallest of the funds, which were scheduled to resume this quarter. Okay, blah, 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 blah. Yeah, it's spooking people out. Questions about credit quality and exposure to software stocks have blogged to the industry for months. The about face on redemptions, just as investors thought they would resume, sparked a shareholder revolt, driving Blue Owl down 9.8%. But overall, it's back down to its original price, 61%. And intraday trading Thursday and deepening a broader sell-off among private equity. Economist Mahad Iran said the changes echoed the early days of 2008 financial crisis. Okay, listen, when this guy Mohammed I'm not sure if I'm saying his name right, sorry if I'm butchering his name, but I think he's from, I forget which big bank he's from, but when this guy speaks, people listen. But he's saying it echoes the days of 2008 financial crisis, although nowhere near the same magnitude. Get the fuck out of here, please. They don't want to panic investors from completely getting out of the stock market. It's the canary in the coal mine moment, similar to August 2007. Yes, it is. Wrote on X on Thursday, the question will be on the minds of some investors and policymakers this Monday as they assess the news that Blue Owl is halting some redemptions. Well, anyway, so thank you guys for tuning in. That's going to be it for today. We continue to have a sell-off in the indices. Guys, please like and subscribe. I'm going to try to do more of these. Okay, stay safe.